Trading and Finance. Visit tradingandfinance.com for complete daily market reports. Subscribe, like, comment, and share.
The market is at a critical gamma level. Will support hold, or will volatility accelerate? Let's dive into today's institutional macro research update. We start with a focus on macro risk. Energy prices are on the move as geopolitical tensions escalate in the Middle East. Brent crude has hit $93.73, while WTI is climbing toward $87. Supply lines are under heavy scrutiny. This energy surge is coupling with rising U.S. Treasury yields, which have recently tagged 4.628%, a significant macro headwind. Yield pressure is being felt across the board, forcing institutional investors to reevaluate their risk appetite as we enter a volatile period. Turning to equity futures, the S&P 500 ES is currently hovering near the 7,531 mark. Precision is everything right now. Our gamma exposure heat map shows the high volatility level, or HVL, sitting at 7520. This is the pivot point for the week. Key support is established at 7,500, while the call wall looms overhead at 7,550. This defines our current trading range. Below 7,520, we enter a gamma flip zone. This is where dealers are forced to sell into weakness, potentially accelerating any downward move. Understanding these mechanical flows is vital for institutional-grade trading. The hedging actions of major dealers dictate the short-term path of the index. Moving to the Nasdaq 100, we see futures at 29,160. The tech sector is facing its own unique challenges. The Nasdaq HVL is currently pegged at 29,175. Tech bulls need to reclaim this level to regain momentum. The backbone of this move remains the semiconductor industry. AI demand continues to drive the narrative even amidst broader market uncertainty. Server rooms and data centers are the engine rooms of this economy. Every price tick in the Nasdaq reflects the health of this infrastructure. Now, let's examine volatility. The VIX is currently sitting at 17.36. It's calm for now, but the charts suggest otherwise. We are watching for a break toward 18.50. If that level goes, the next target is 19.50. A VIX surge often signals a transition from low volatility grinding to high volatility selling. Traders should be prepared for sudden shifts in sentiment. Nvidia remains the market leader. Currently trading at 207.29, it sits just above its critical HVL. The key level for NVDA is 202.50. Staying above this maintains the bullish structure for the broader tech tape. Meanwhile, gold futures are showing strength at 4,123. Investors are seeking safety in physical assets. GLD levels are clear, support at 370 and the call wall at 380. Gold's momentum reflects deep-seated macro concerns. Let's look at the scenario dashboard. We currently assign a 55% probability to a bullish recovery from these gamma levels. Scenario 2, a range-bound market, carries a 30% probability. This would involve a consolidation between support and the call wall. Finally, we have a 15% probability for a sharp downside acceleration if the gamma flip levels are breached with volume. Watch the levels, respect volatility, follow the flow. Stay disciplined as the market opens today, for educational purposes only.
Trading and Finance. Visit tradingandfinance.com for complete daily market reports. Subscribe, like, comment, and share.